Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
Welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the D Street. Remember, this is the last trading hour of the week. It's a special day of trade when we are looking at Monday is going to be an off for the markets, but instead we've seen a full day of trade on a Saturday, which is pretty unusual. But not that much has happened this Saturday of trade. If you see, the morning gains have slightly fizzled out. Right now, you see 21,611 on the Nifty. That's down about 10 odd points, just flattish to negative bias kind of a trade. With Nifty Bank still kind of, looking up at this point in time as well at 46,101. About 0.8%. So those are the pockets that are actually pulling up or giving some kind of an activity to the markets. It's the PSU space that has been clearly in the buzz. Whether it's the railway stocks, the power space, those are the pockets in action in today's trading action. And of course, we've seen the markets react to a slew of numbers that have come about. Reliance Industries, HUL, Kotak Mahindra Bank, and a slew of other mid-cap names like Paytm and, JK Cement that has just come about. So these are the kind of numbers that the markets are reacting to. RL right now, 2732. Flattish with a negative bias over there. HUL has disappointed and therefore you can see a deeper cut over there of about 3% at 24.82 for that one. So that's largely the kind of trade that we are witnessing at this point in time. Let's actually welcome our guests on the show. We have two special guests for you joining this afternoon. Soni Patnaik, KVP Derivative Research, JM Financials is joined in. Also with us is Raghavendra Singh, market expert, both of them joining in right now. Soni, you first. Very good afternoon. Good to have you. On a Saturday, we rarely speak because it's an unusual day for us. Tell us first, what were your Saturday plans which you had to quash late in the evening when you got to know it's a full day of trade?
Good afternoon, Sakshi. Thank you so much for having me on a Saturday. So I think not much. Just wanted to rest and have a quiet time with my family. That's all. But always excited to still see markets up and running on a Saturday. Although the volumes are quite low today, but there's still a lot of good movement coming in right now. I think that could be exciting at least for a Saturday closing.
Absolutely. But we'll take it what we have. Monday is an off, so that's the compensation. Even though you would say and argue that a Monday off does not feel like a full weekend off, that is. But we'll take what it is. But tell us, what do you see in the markets right now? We've seen a very narrow band of trade in today's trading session. But looking forward, how does the market really look like? For the entire week, we did see a sell-off midweek. That got covered, at least giving some breather to the bulls. Have we made a bottom for the near term? What do the charts tell you?
So, Sakshi, if we look at Nifty right now, I think Nifty has taken its support from 21,300, like we've already discussed yesterday, and it's still in quite that small quite a silent zone as of now. There's resistance around 21,800, so it may remain sideways in this put in this range for a day or two more. I think what's interesting is Bank Nifty. I think everything is quite dependent on Bank Nifty. So I think if it can hold and test 46,500 to 47,000 levels, then only there can be some respite seen in Bank Nifty. There are a lot of shorts that are formed in Bank Nifty for this week. However, there could be short covering scenario only if it's able to cross above 47,000. The only silver lining right now is that Bank Nifty has held on to 45,800 odd levels, which is a very crucial level to watch out for on weekly closing basis. And we can see that it's trying to pull back up towards 46,200. It is being led by a lot of strength seeing in PSU banks of late. So I think that's where some respite can come. most likely. So I think it's all eyes on Bank Nifty, whether we are able to cross 46,500 as a first resistance and then 47,000 as a second resistance. Most likely after that only there could be a confirmed data point which can lead both the indices into further direction.
Absolutely. And you did mention about the Nifty PSU Bank. So that's the index that is actually moving the sharpest in trade today, about 2% higher in trade for that one. A slew of stocks over there which are in action today. PSP, Central Bank, Union Bank as well after earnings, about 5% higher. You have UCO Bank also that's moving up in trade. Then you also have Indian Overseas Bank, PNB also 3% up in trade. Canada Bank, look at that one, a very, very sharp move coming in on that one too. How would you really look at these slew of PSU banking names? We've been discussing this, threadbare, the kind of moves that we've been seeing in PSU banks. But every time we believe that, perhaps it's just too much done in a too short while, there's another day of very sharp momentum. What would you suggest investors here?
So I think PSU banks have actually held on to a lot of important support zone, even when Bank Nifty had tested, very drastic correction of 2,000 odd points in a single day. But if you look at individual stocks like Canara Bank, Bank of Baroda, SBI, PNB, they all have individually held on to very important support. In fact, PNB has actually even given us breakout this week, and it's looking quite positive from current levels. So is Bank of Baroda, and Canara Bank also has come out with a fresh breakout right now. So I think one can just digest the quality stocks on any sort of such corrections that we can see in the markets, and just like be patient and pick out those quality stocks at good levels and hold on to them only when the markets are about to bounce back. You can definitely reap the benefits of that.
Okay, so that's as far as the PSU banking space is concerned. And no matter how much we talk about the railway stocks, there is no sign of slowing down in this space whatsoever. Another day, and we've seen IRCON International, IRFC, RVNL extend the rally, zoom up to 13%, record high levels. I think for IRFC and RVNL, the stocks have gained up to 70% in January itself. The kind of move that we've seen is remarkable on this one. Again, we are looking at some circuits on the top side for a lot of them, RBNL, IRFC. How would you really look at this entire frenzy that we are looking at in the railway space? Does it just have to do with ahead of the budget railway rally that we always get to see? Or is there more to it? Is there a structural story that is building up, that is fresh, that a fresh re-rating is perhaps taking place here?
It's, I think, the recent gains that we've seen and the crazy move that we've seen in the entire railway pack. It's backed by constant breakouts, backed by constant long build positions from a very technical and derivative perspective, and also backed by a lot of fundamental calls, from various broking houses. All are quite positive on this particular sector. And of course, these stocks, they've already rallied like 40-50% from the initiated levels. It's wise to sort of book your profits at current level, and maybe wait for a small dip around any dip around 10-15% in the sector would be a good dip to reinitiate those longs again. And the people who've actually missed out on this rally can also participate in the next round. So I think it's difficult to say whether the entire space is done and dusted right now, because it certainly doesn't seem so, and there's a lot of momentum left. So I think any dip that you can see in the entire sector, just keep on adding those dips, adding and building your positions accordingly.
Okay, that's fair enough again. And a lot of stocks, they are continuously hitting like record high levels and, on circuits day after day as well. One more space that's buzzing in trade despite a quiet session is the mid cap space. It's at record high levels yet again at over 48,000, 80 kind of levels, 171 kind of levels that we are looking at this index. Anything from the broader markets that you really are looking at, where opportunities can still be scouted accounted for. I can see a lot of tire stocks which you've mentioned on our shows as well. Apollo Tires, Balkrishna Industries, MRF, they're all, rising very, very sharply in trade. Then you also have Fact, REC, Max Health kind of names from the mid-cap basket that are doing well in trade. Anything that strikes you from the mid-cap basket, Sony?
I think speaking of the tire space, of course, we've seen very good rally. I think Apollo Tires, Balkrishna Industries, all those JK Tires, very, very good move. But however, these stocks could be a seasonal sector, and maybe they have actually run out that already missed out. They've run out that particular expectation of rally that was supposed to be seen in them. In overall mid cap space, of course a lot of stocks, but from the FNO
Yeah.
count, I do have one pick which is quite attractive even at current levels. It's from the mid cap IT space. It's Birla Soft. I think
Okay.
Birla Soft, for the last this entire week, whenever the volatility in the market had come, Birla Soft held on to a very important support of 760, 765. Even in the
Hmm.
correction that Nifty and Bank Nifty saw that day, Birlasoft was clearly outperforming, and it had tested higher levels of quite well, 780, 790, 800. The next day we saw there was another dip. It tested 765 and then again it bounced back. Now it's again back up above 800, 805. So I think Birlasoft is one stock which is trying to build higher support levels, and it's the higher top, higher bottom formation that can be seen technically on charts. I think
Hmm.
Birlasoft is all set. It's all poised to give you another set leg of rally from current levels. Very good support, 765, 780. And on the higher side, you could be looking at targets of 850 plus levels. I think it's a short-term play, but it's quite strong. It's building up long builder positions on and off again. So I think that's also
Hmm.
very important to keep a watch. Every alternate day you see that a lot of open interest positions are getting added in Birlasoft. So I think that's where people are, perhaps sort of emptying, preempting a big move in that stock.
Okay, fair enough. Let's look at some more pockets that are buzzing. I think the cement basket is again on the buzz, and we're looking at a slew of earnings also from here. So JK Cement, that's the stock that's reported the earnings, and the stock is doing well at this point in time. Even Free Cement has picked up pace. How would you really look at these particular stocks? Of course, again, the cement basket has been on the move, Sony, of late. Now that the numbers have come in for JK Cement, the company has reported a profit of 284 crore rupees. Against this is higher than most of the street estimates as well. Would you look at JK Cement at this point after earnings, or is there any other cement stock that you believe is better placed in terms of charts?
I think JK Cement, if I remember last week, it had shown you very, very aggressive long builder positions of more than 30-40%. And a stock has seen its volatile movement, but it has not exactly broken its any important levels. I think 4,000 remains a near term good support. As long as 4,000 is, it's held and it's defended, it definitely will try to bounce back again up to levels of 4,300. I think that's a good play. Any dip you can see up to levels of 4,000 can still be bought into, and keep maintain that as a good stop loss. It should bounce back towards 4,300.
Okay, so that's as far as the cement pack is concerned. The other space that's buzzing is the entire power space as well. You know, NHPC, that's the one that zoomed 15% after the strong OFS. That's charged up even the power sector in trade today. And the power index also about 1.5, 2% higher in trade. How would you really look at the entire power space? Which is the stock that you would throw your weight behind? We've seen stunning moves on Coal India, on NTPC, on Power Grid, even the private players like Tata Power, Torrent Power, Genus Power. These are the stocks that have really buzzed. In fact, not just power generation and transmission, it's been also the power finance names REC and PFC that have been moving cohesively. How would you really look at this entire power space as of now, Sony?
So, speaking of the entire sector, this has also performed quite well. NHPC's, on a very separate note, 76 was its level of breakout. It's still holding above that with very high volumes and a positive RSI divergence. So I think there's a lot of more space left in NHPC up to levels of 90 or so. Speaking of Coal India today has seen very aggressive long beta positions of almost approx 20%. So I think that's very strong. And Coal India is also, it has also given a breakout on charts. I think it's definitely heading towards levels of 420, 430 odd levels, and a very small, strong support of 380.85. As long as 385 is held, you should definitely look for Coal India for higher targets of 420 plus levels. And the third stock, even NTPC is given a good breakout today. NTPC is also looking good on options chain as of now. So, in the range of 310, 308, you can definitely enter, keep a very small stop loss of 299 and targets of 325, 330.
Okay, so that's as far as the power space is concerned, and Sonia has given you her preferred picks from the sector in case you're still chasing some momentum in this space. The other space that is looking, buzzing at this point in time is the Adani group stocks as well. Adani Enterprises about 2% higher in trade. Adani Ports is the one that's seen a sharp tick, 2.5% uptick for this one as well. Even Adani, Energy Solutions, that's the one that's up 4.36%, about 1,096 kind of levels can be seen on that one. Adani Power is up by 3.2% again. The entire Adani space buzzing after some bit of a break. How would you look at this fresh move?
Yes, I think Adani, it gives you very wide movement, and the moment it starts running the entire day, irrespective of how the markets are, Nifty, Bank Nifty, it keeps on moving on its own trajectory altogether. And
Hmm.
of course, it's all looking quite good. Even Adani Port, I was just noticing the charts of Adani Ports. It's giving a good, in a small intraday breakout as well. And on intraday basis, I think it's heading up to levels of 1200. I think that's how all the stocks, the entire pack, Adani Group is all intraday basis, for another 2 odd percent. The movement is left for the day. I think that's how one can definitely reap the benefit of the remaining day.
Okay, let's shift focus back onto Nifty Bank, 46,073, 374 kind of levels being seen on this one. And on the private banking space, we still haven't discussed Sony. We've discussed the PSU banking space. A slew of stocks in focus. Kotak Mahindra Bank came out with earnings as well. We've also seen HDFC Bank before it. All eyes on ICICI Bank's earnings now. And of course, we're also looking at stocks like IDBI Bank, a very, very strong move on this one too. How would you look at these particular banking names?
So, Kotak Bank results were out today. 1760 was a good support. It did not break that support even after the results got out. So, I think it's not exactly given a breakout, because that breakout should come above 7, 18, 20, 18, 30 odd levels. Today's high is also 1829. So, I think it's just in that range. So, either side of the break of the range can give you a further directional move in Kotak Bank. But yes, of course, talking about other private banks, even ICICI Bank is about to give its earnings, declare its earnings today. But on charts and on options chain, if we can look at ICICI Bank, there's a lot of call strike open interest unwinding, which is sort of a positive sign, which is indicating that a lot of call writers are exiting the position. There is a resistance for ICICI Bank technically to be seen around 1,000, 15,000, 20 level. So if it's able to cross at post the result impact, and you can see it heading towards 1,040 on the downside, multiple support starting from 990 to 980. I think there are a lot of multiple supports, but the important positional support for ICICI Bank is at 970. So as long as 970 is held even after the result impact, I think the stock can see the strength to head higher and break the resistances.
Okay, so that's as far as the stock is concerned. We will continue to focus on this one as well going forward and continue to monitor the stock prices even going forward from here. Any other pockets that Sony you have identified which perhaps are at a fresh breakout or strong support in the charts being seen at this point in time?
Definitely. I think instantly what I was just seeing is Bharti Airtel. Bharti Airtel is looking quite strong. It has broken above 1100 yesterday and quite strongly holding on to those levels. I think Bharti Airtel on an immediate basis, 1110, 1115 range still holds a very strong support. on very short term base, and the stock can rally up to 1160. I think that it's coming week is sometime it's earnings, but that's how the option chain and technical parameters are playing out for Bharti Airtel. So I think 1160, 1170 is a higher target for Bharti Airtel, and definitely one can enter in it, keeping a stop loss of 1110.
Okay, Bharti Airtel from the large cap space is something that you can watch out for. Of course, the stock has been showing momentum over the last 8, 9 sessions as well. And perhaps this is a stock that you should be on your watch list as well. Let me talk about one more stock, and that I just caught is the EPC company, Salazar Techno Engineering. If you track this stock, Sony, a very strong move of 19.3% was seen. It's a below 100 rupees stock, 94.6 odd levels as well. The news flow is that the company said its board has a proposal to merge with Hillview Infra Build with itself, and a decision in this regard was taken at the board meeting of the company earlier this week on Thursday. Anything that you look into the charts of this company that show you any kind of a promise?
So charts, I can see that it is decent as of now. There's not a confirmed any one-sided direction. Then perhaps a wait and watch would be a better strategy to go for the stock. There is resistance at the day high that it has made today, and if it's not able to cross and close above it, then there could be some sort of a profit booking. So it's just better to just wait and watch in this particular stock as
Wait and watch in this stock as of now. Okay. The other stock that I'm going to be discussing, which I also talked about, is Reliance Industries. We were discussing ahead of the earnings. The stock is subdued now. Even though the company has reported promising numbers when it comes to Reliance Retail, which has clocked $10 billion revenue in one quarter. Reliance Industries has recorded an EBITDA for oil and gas, and retail revenue has crossed 80,000 odd crore rupees. It's a record EBITDA for oil and gas over there. The telecom companies' net subscriber addition were at a 10-quarter high. It beat estimates on that account too. However, some subdued momentum when we talk about quarter-on-quarter numbers, and it has missed certain analyst estimates on some accounts as well. How would you really look at Reliance Industries now, and what would you tell investors?
so Reliance has two crucial levels. One is 2700 on immediate basis. It's a good support as per the option chain data. But if we look at the technical breakout, it is at 2650. It was a level last week where it broke above that level, and we saw it all rallying up to the levels of 2800. So I think that these are the crucial two levels to watch out for. And since it has already run up before its results, and we've seen that movement all come in last week itself. If you see the dip around 2700 to 2650, that should be a good range to re-enter Reliance. Positionally, for a long term, the stock is still strong on charts and options data. It has the capacity, it has a lot of strength to break out above 2800, which is its current resistance moment. So this is a good range to accumulate and hold on to the stock. And the moment you see it crossing above 2800, you can see it giving a fresh breakout from where it can actually test 2900 plus also. I think that's how the levels are going to watch play out accordingly. So keep a watch on Reliance, buy on the dip, hold on to it, as long as 2650 is not broken.
Okay, got that. So that's as far as Reliance Industries is also concerned as well. Right now, let's look at the markets again. We are nearing the 3 o'clock mark. Flattish momentum on Nifty, 21,601 is the Nifty bank that's holding the ground on the upward side as well. The broader market's doing well as far as the sectors are also concerned. So apart from the broader markets, you also have individual sectors that are contributing to this momentum again. So you have sectors like the financial services, they are holding up. You also have media stocks that are holding up. Of course, a lot of it has to do with Z. PSU banks, we already shared. Private banks are up by 0.6% odd. Oil and gas slightly up in trade. What's not doing well? Realty is seeing profits being taken off. Consumer durables slightly down in trade as well. And you're also looking at FMCG and IT, which are not contributing to the gains in today's trading session as well. So let's talk about these underperformers also, Sony. What do you make of the IT names? You did talk about Birlasoft from the broader markets and the mid-cap IT space where you are more positive. We've seen a slew of IT company numbers that have already come about, so the earnings overhang is largely getting underway. Of course, we do not have that much clarity of whether the macro or the demand scenario is completely out of the way. It could take some more time as of now. How would you advise investors to go ahead with the large cap versus the mid cap IT basket right now?
I think mid-cap IT, I've already sort of shared my views out of the entire pack. Birlasoft still looks to be the best play. Large cap ITs is actually not doing that bad themselves. If I look at Infosys right now, 1600 is a good support. It has not broken, even though, we've seen it uh, taken out all its higher gains from 1680 odd levels. But it's more like how well they're placed at the support levels on options chain data. Also, if I can see 1600 uh, you know provides you a good support with a lot of put open interest over there, so that's not that easy. It's not going to be that easy to break and just see Infosys going below 1600. So there could be sideways movement, there could be dull movements in the days coming ahead, but most likely it's looking good structurally. The moment it's able to cross above 1680, you'll see a fresh breakout, and the stock can actually even rally up to 1800 odd levels. I think these are good levels to watch out for, and just hold on to it as long as 1600 is not breaking from a positional point of view. Similarly, talking about TCS also, I think TCS is something that has been facing its resistance around 3950. It's not able to cross that level. I think TCS is comparatively not that outperforming for Infosys as Infi is looking at right the moment. But TCS has multiple support areas. 3800, where your option chain is also indicating a support, and on technical charts also 20 EMA is at 3805, 3806. I think both are inclined together to provide that 3800 is a good support. If it breaks, you can see some further weakness in TCS, but if it's getting held on to maybe the next week, then it can bounce back also. So, from the large cap picks, of course, Infosys is a better pick right now than TCS. The third pick would be from Wipro. I think Wipro is also a stock which is looking good, and from lower levels of 465,
Yeah.
it's continuously seeing a good buying. So Wipro is it's seeing that support from 465. 490 or something is a resistance. If it's able to take out the resistance in the next week, you'll see the stock back again up to 530 odd levels. I think this is a very good stock to watch out for, and risk reward ratio is also favorable. So that's how the three stocks from the large cap IT is placed out.
Okay, so there you have it from the large cap IT space where you can look at some dips and perhaps take it as a buying opportunity as well. The other stock that I wanted to discuss with you is IREDA, a very, very strong move right there coming in. On the earnings as well, and perhaps a lifetime high for the stock. Of course, it got listed, was in a buzz for about 4-5 odd trading sessions consecutively, gave wealth creating returns to investors. Then came a plateauing period again. Of course, you do not have Sony, a very long-term historical chart, very, very, small-term chart you have. But in case you have looked at the kind of momentum that we've seen in IREDA, what would you advise?
I think technically it is looking good. The breakout that I can see from the charts has come above 126, of course. I mean, that's how when the all-time high was made back then. So as long as 126 is holding, it's quite good. There is a gap between 135 to 140. I think that gap may get filled out sometime. If you see that dip, you can just enter in that dip and that decline, just hold on to with stop loss of 126. And of course there is no such high levels that it can face a resistance, but then from the risk reward point of view, it can test 165 plus levels. I think that's how it's good placed.
Okay. What we'll do, Sony, is take a short break right now. When we return, we will continue to discuss the last half an hour of trading strategies. Stay with us.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.
Welcome back. You're watching Market Today on Business Today Television. I'm Sakshi Batra, and with me is my special guest, Soni Patnaik. We're looking at navigating you through the last half an hour of trade for the week. It's been a volatile week thus far. At this point in time, the markets look a little flattish. Sensex down by 174 points, the Nifty down by 30 points at 21,591. So we're again below the 21,600 mark as well. But it's the mid caps that are not stopping anywhere. Record high levels, 0.6% higher, 48,121 for this one as well. And even when we look at the Nifty Bank, that's pretty much holding up the gains. And a lot of these gains are actually coming in from, some of the companies that have reported their earnings as well as the PSU banks as well. For IDBI, for example, we were discussing this stock. The net profit over here jumped by 57.2% at 1458 odd crore rupees. The asset quality improved for the bank, and the stock is now up. I think it's up about 13.5% at this point, 15% now. A very, very strong move coming in on this one. If we look at a 1 month level, it's a 1 month high, 6 month high level. It's a year to date high level. Even on a 1 year basis, it's at a high. In fact, it's a multi-year high for IDBI Bank. Once again, Soni, could you look at the chart and tell us?
Yes, definitely, Sakshi. So I think IDBI Bank today has tried to make good moves. There is a resistance of about 75 where the call writers are not exiting the positions. There's a lot of open interest still left at 75. So I think it could be a bit difficult to see it crossing 75 levels. Although on the downside, a lot of stocks, it has also seen good support around 73, 72. So I think that's how it is moved. The stock positionally on a near-term stores purpose, it has given that breakout and it's looking quite good. So one can continue to hold in the stock. There's a lot of volume action happening today, and as long as 84, 86 can be the higher targets to hold on for those levels.
Okay, so that's as far as IDBI Bank is concerned, and you have a view on that front as well. And we will continue to monitor such banking names as well. Remember, at the start of this entire year, banking was emerging as a consensus buy space for a whole host of analysts, be it the private banks, which have been rather underperformers, or the PSU banks. Of course, we've seen a slight disappointing number coming in from HDFC Bank as well. But, a lot of banks like Kotak has reported their numbers today. We've discussed that stock as well. ICICI any minute now should be reporting the earnings, and we will be able to see what numbers really come about. So we will continue to focus time and again on the banking space names as well. The other space, Sony, that we've been discussing a lot before is the defense space and the shipbuilder space as well. Of course, there is again no let up in this space. So why should we not talk about this space as well to find out what exactly is in store for these two spaces? Stocks like HAL, Mazagon Dock, Cochin Shipyard, for example, they have shown some massive, moves over the recent past, yet again, after having a stunning rally. Anything that strikes you from these particular spaces that you believe is, getting ready for another leg up?
So from the defense space, BEL, Bharat Heavy, Bharat Electronics, not Bharat Heavy, sorry, it is BEL. I think that's looking good. It has given a breakout of above 188.5, and the stock is also looking quite good. there's on a positional term basis, of course, from medium term perspective. So the moment it crosses 200, you can see it heading towards 210, 215. So I think this is one stock which can definitely be looked at. 180, very strong support. On weekly charts also, I can see 180, 178 good support. So as long as it's not breaking, this stock will definitely attempt to test 200 plus. And then once above 200, it can go ahead for targets of 210, where finally you can book the profits.
Okay, got that. The other stock that I really wanted to take your view is Paytm. The results came out, the revenue rose 38%, your losses for the company narrowed down to 222 odd crore rupees as well. A lot of brokerage houses have also come out with reports on Paytm. Post the earnings too. We have seen the stock recover. Today it's up by 4 odd percent, 784 kind of levels can be seen. And of course, it's definitely out from the slumber that it was in for a large period of time. So from the 52-week low levels, it's recovered pretty sharply, about 30-40% odd or so. How would you look at Paytm shares now, Sony?
Paytm, it's decent, but it's not very strong. It's just trying to fill the gap that it had seen somewhere between 7th December and 6th December. There's a huge technical gap. I think maybe due to some news, it had seen quite a significant gap down. So that level was somewhere between 810 to 740, and it's just come about that recently to fill that gap. So it's just filling. So on the higher side, maybe at best 800, 810 can be seen, but it's not a confirmed reversal buy from those levels. I think the breakout, a lot of time it has to see the breakout come up above again. There are multiple resistances above 108, 810. You can see 840 also is a resistance. So I think stock can test the patience on the downside immediately. As long as 740 is not breaking, there could be some respite that it can attempt to test 840. But however, I think it's just best to avoid the space as of now, because of the.
Okay, fair enough. Best to avoid the space as of now is the wise recommendation that's coming in. So continue to focus on that as well. Let's also look at the other internet stocks. Do you find anything that investors can look at? In briefly, we had seen Nika up in momentum. We are awaiting the results for this time around. Policy Bazaar will be coming out with the earnings at the end of this month again. Delivery, these car trade, for example, these were the stocks that were back in momentum. Anything that you believe that looks interesting at this point in time from this space?
I think not a lot of technical charts that I could read into for this particular space, but it's mostly like just avoid for some time. There's a lot of news floating around for the entire sector as of now, and unless some clarity can be given out for the store sector as a back, it's just better to just wait for the maybe the result seasons to come out and see how the earnings are for these individual stocks. Maybe a fundamental analyst can throw in a better light than from a technical perspective into this. So, as of now, it's just like avoid this sector for now. And, if there's any confirmed data points that we can come across, then maybe, we'd like to share it back there.
Sure. Let's discuss the other space that is perhaps in slumber today, the real estate space. Of course, this space has been a remarkable outperformer of 2023. I think it surged about 80-85%. Even in the first 10 days of January, this entire space was buzzing. And how? What is the current status in the real estate pack that you see, Sony, or anything that you believe still has a lot of momentum to be chased?
Real estate pack has been a constant buy on dip sort of a sector, for the past 3-4 months that we've seen. Any stock you name it, like DLF, Godrej Property, Oberoi Realties, any dip that you see 5% or 10% on a higher side of dip, it just gets bought into, and then you see good again all-time highs. So the stock, even for DLF, even Godrej Properties, it's still holding. And on cash stocks also, similarly, we can see that Shobha Realties and all, it's all giving the same picture. So I think as long as the dip, you can see anywhere around in the next 5% that should be a good, re-entry point for the sector. I can see good support. If we speak strictly about just Shobha Limited, I can see that there are good lot of support at 1400. So I think that should be held. The closer you get, you enter towards a dip, it's better. Similarly for DLF for DLF 750, 760 is a good support level. The closer you get to the support, you get the chance to enter near the support. It's going to be good. And then again, once it's up, when markets also stabilizes and the broader markets are again outperforming, the stock would be the first one to jump back up again in good gains. And it can be a good strategy for that. So I think it's just a matter of time, just patiently enter, accumulate on the dips.
Okay, patiently accumulate on the dips. Related sector is the housing finance companies, more the demand for real estate, more the demand for homes, especially the kind of news headlines that we've been looking at, that these real estate companies have been managed to sell out all of their luxury flats, high-end apartments in just about 1 or 2 days. There is a huge demand for, very, very highly priced flats for these majors, like maybe even Godrej Properties, DLF, Sopa, Macrotech, all of these companies. So let's look at the housing finance companies, and a lot of numbers have also come in today. They have been in focus. Remember, over the last 1 week, we've been sharing and asking analysts for their views on stocks like Canfin Homes, Aptus Value Housing Finance, Home First Finance. And in fact, Canfin Homes and Home First have also come out with the earnings. So let me just read out the numbers for all our viewers. So for Canfin Homes, that just reported its numbers a while back, we did see that the AUM growth has happened on a 13% year-on-year basis and 2% quarter-on-quarter. We've also seen that the NIMs have expanded as versus the estimate of a decline, and there has no impact on the yields or provisions there. Therefore, Canfin Homes is in focus. What we've also seen is that for Home First Finance, in line with estimates, Q3 profits have come in with encouraging loan growth target as well. The Q3 momentum continued with stable spreads and asset quality also at this point in time. So let's understand from Sony anything that she can look at into the chart of Canfin Homes and Home First Finance. Even though the stock prices have dwindled to 768 around for Canfin Homes at this point in time, and Home First Finance also, how would you really look at this space? Anything that strikes you?
Then just speaking about Canfin Homes, it was looking good in the morning when it was holding above 780, although it has given that those levels. And now if it closes below that, you can see it further sliding down towards 740 also. Not very strong technically. It is breaking below its 50 and 20 EMA as we speak of the moment. There's a significant RSI negative divergence also. The entire space also has not performed very well. There has been no significant outrightly eye-catching movements that we have seen, neither any strong positions on the long side as such. So I think it's just a more space which is quite dull at the moment, and one can just wait and watch how the broader markets perform in relating to this. As of now, it's an avoid for this particular sector.
Avoid for this particular sector as of now. The one space that we haven't discussed, Sony, thus far is the entire pharma space as well. We did see a lot of momentum building up, even in the large cap pharma space of late. Stocks like Sun Pharma, Cipla, Dr. Reddy's coming back into flavor. The entire hospital stocks as well, they were in focus. So Apollo Hospitals, Metropolis Healthcare, Max Healthcare, they were buzzing as well. The entire diagnostic space, Divis Laboratories, Laurus Labs, these were in focus as well. Which is the pocket from the entire pharma and healthcare pack that you believe there is enough and more potential that investors should continue to focus on?
I think, Sakshi, just looking at this Nifty Pharma Index, just to get a broader outlook on how this particular sector could perform. Technically, it is not looking quite strong as of the moment. There is resistance, which is indicating that maybe not all the stocks from this sector can perform to the best level as expected. However, whenever markets are volatile or choppy, pharma, FMCG, these are these defensive counters which actually do come up to save the indices. but most likely, it's not going to give you very high or aggressive returns in the coming days. There could be short-term trading perspective, short-term trading movement that you can see maybe like 2-3%, during the days when we see Nifty struggling to manage up. However, there are not a lot of stocks which have given that breakout. So I think 2 days ago, when we'd seen some movement coming in from with stocks like Sun Pharma, Lupin, they have all given up those sort of gains, and they are again facing the resistances. So I think it's just a wait for this particular stock. There could be some profit booking because previous 6 months we've seen this sector performing very aggressively. There could be a moment that it's to time to just book out the profits from pharma space and enter into other sort of sectors.
Okay, fair enough. Let's also welcome Raghavendra Singh, who's now joining with us. He's market expert. Raghavendra, afternoon to you. You were facing some technical glitch and therefore you could not join in early. But tell us your views now. What is your sense of the overall market scenario? What did you make of the midweek fall that we saw in the markets, and where do you see the markets will be, going forward from here?
Very good afternoon, Sakshi. I believe as far as market Nifty and Bank Nifty is concerned, Nifty has broken a very important support level of 21,700 and 21,800. As per the option chain, because we are entering into, we have already entered into the monthly expiry. So as per the option chain, I think Nifty is facing strong resistance at 21,700, having highest open interest on the call side. And downside, we have very strong support at 21,500 because we are having almost 1 crore plus open interest on the put side. Similarly, in the Bank Nifty, 46,000 is acting as a very strong support and resistance zone. If we are closing above 46,000, then definitely call writer have to square up their position, and Bank but is there strong biasness, and I believe we can face a very strong selling pressure in the next week also, because the kind of moment we have seen and the selling pressure we have seen in the SDFC Bank, it is indicating that something is wrong and market is not ready to digest SDFC Bank result. And similarly, market is facing a strong resistance with the all large cap stocks. So I believe market is under pressure and we can see some selling pressure ahead. We are entering with the ICICI Bank result in the next week, and this can be quite, I think we can see more selling pressure in next week.
Oh, okay. So one has to be a little cautious. Cautionary remarks coming in from Raghavendra right there. Raghavendra, any one or two stocks that you're betting big on in this current market where you still believe a lot of value can be seen, even though the markets on the benchmark level, they are flattish at this point in time. It's the broader markets that continue to soar higher. A lot of pockets, be it railways, power space, PSU, the entire space, those performers of the past are coming back, and there is no let up in the rally that we are seeing. Which are the one or two stocks that you're betting big on?
Sakshi, we have discussed so many times IRCTC on your channel, and
Yeah.
now IRCTC have crossed 1,000 level. I told on your channel that 13,000 plus I'm expecting very, very soon. Now we are heading towards that. Apart from that, CET has given a very strong breakout above 26,2,700 after very long time. It's a multi-year breakout, and I believe we are entering into 3,000 plus level very soon. Today it has already crossed 29,000. So CET is very strong. And apart from that, PSU, IDBI Bank, Railway Stock, IRCTC, IRFC, IRDA. So all these stocks are looking good. IDBI, I'm expecting to cross above 80, 85 plus and to enter into 100 plus 3-digit zone. So these are the stocks. And apart from that, there is a small, stock which can give very good return in defense sector. So
Yeah.
I'm expecting HAL. HAL is looking very good on chart. So HAL 3,300, 3,400 plus is looking very good on the chart.
Okay. Give us your views on some of the companies that have come out with the earnings. RIL, what's your thought process there after the earnings? How would you see the stock really move from here? That's the first one. The second one I want to take your view on is IREDA. That's again, remarkably moved in trade today. The third one I want you to focus on is Paytm. These three stocks.
Reliance has given very good numbers, but it is muted and it was expected in the line with the street. So I believe Reliance, RIL, they are the big on the street, and they have very strong holding. You can say in the index, so 12% weightage they have. So RIL and Geo both have given very good numbers, and I believe this can give 2,800 plus rally very soon. But I think stock has already given 200 point plus rally before the result. So I'm not expecting very good upside above 2,800, 2,770. Apart from that, IRDA is it is a very good stock, and it has given very strong run up recently. So I don't think very good upside on the near term, because it has already given good return, good upside rally. Paytm, the result was good, but I don't think that stock is going to do much better than the recent rally. I'm not expecting the very good performance by the Paytm, because the stock has already given good 100-point upside rally in last 1 day, 2 days. So 800 is a very strong resistance for Paytm, and 800 plus looking very difficult. So I believe all three stocks should book profit and stay away, because I'm not expecting Nifty to go above 22,000 very soon. I'm expecting 21,200, 21,300. So these are the index stocks, RIL. So this is what my view is all about.
Okay. Sony, let me get you in the conversation. 321 right now. Good time to take BT, ST, trades from you for Tuesday.
It's, I think, from the BTST perspective, Bharti Airtel is the one pick that we would still keep an eye on, and Bharti Airtel can do good. As I've already explained, 1110 is a good support. So I think any dip that we can see up to 1120, 1115 range, can be bought. 1110 as a stop loss and target of 1140, 1150.
Okay, got that. Raghavendra, anything that you'd like to add on BTST, ST, trade?
Yes, definitely. REC has given a very strong breakout, and the all option writers have been trapped around 450, 440. So I'm expecting a very good short covering in REC. So it should go around 470, 480 level in the next week. So my bet is only on REC.
REC. Okay, got that. So those are the stocks that you've got as BTSC trades coming in from both of our experts. Raghavendra, any particular pocket that you believe can continue to outperform, despite the fact that you believe the stock markets may be in a corrective mode from here on, which is the pocket that you believe can continue to give, investors a good amount of value?
Tire stocks, because we have seen a very good breakout in all tire stocks, whether it is MRF, Apollo Tire, CEAT, Balakrishna Industry, BKT. So I'm expecting another 10 to 15% upside rally in all tire stocks. So I will definitely go with the tire stocks only: CEAT, Apollo Tire, MRF, and BKT.
Okay, tire stocks as well. Sony, any particular pocket that you believe is going to be in focus for the next week? Any particular stocks that you'd be looking out for?
Yes, so from the banking space, PNB would be the stock that I would still look at, because PNB, it has given a good breakout above 100. There were a lot of aggressive call writers at 100 call option. They've all exited. See, it has been happening since yesterday, and so today also it has seen a follow-up buying of that breakout that we saw yesterday. So PNB is a good good buy from current levels. Also on any dip till 103, you can accumulate, keep a stop loss of 100 and targets of 108 to 110.
Okay. Sony, since you mentioned about Bharti Airtel, there's another, listed stock from the same similar space, broadband networks, etc. Tejas Networks. The company reported its Q3 numbers, widening of net losses. It tanked 7% in trade today after reporting a net loss of 45 odd crore rupees. After seeing a widening of losses from about 15 odd crore rupees in the year ago period as well. we've actually seen that the company's stock has really reacted sharply on this one. Anything that on the charts you'd like to advise here, and then I'll take Raghavendra's view also on the earnings of Tejas.
It is looking quite weak on charts. There is the 200 EMA, which is its next support, and that is around 790. So I think it's not very strong as of now. We've seen breakdown of the stock from levels of 846, 840, and below that it has tested lows of 800. So I think as long as it's not able to cross above that resistance of 845 on a higher side, there can be no reversal on the stock particularly. And on the downside, 780, 790 is the range that it can test. Now, were it to break that support also, then you can see further weakness in the stock up to levels of 720 to 710 as well. So I think it's just better to stay away from the stock until the technicals have fixed themselves up.
Okay. And how do you see the Nifty and the Nifty Bank panning out for the next week entirely, which again is going to be a truncated one since Monday will be a holiday? There'll be 4 days of trade that we will be looking at. How would you really look at that space? And of course, the entire action will now shift to Ayodhya.
Are you asking me?
Yes, Sony.
Okay, so Nifty is still in the range 21,500 immediate support. If it breaks 21,300 is there to give you that cushion for the next week. It is important to remember that the rollovers are going to start from the next week. Although Monday was supposed to be the first day, but because of these last minute exchange, I don't think that the starting first 2 days will see any higher levels of rollover action. However, it's a next monthly expiry for next week, so it may remain in this consolidation range, the sideways. A broader range, if we talk about 21,300 to 21,800, a very tight small range if we talk about then 21,500 to 21,700. I think that's how it's going to pan out. Largely depends on how Bank Nifty can play. If Bank Nifty is able to cross 46,500 as a first resistance, 47,000, 47,200 as a next resistance in the next week, then there can be some respite and short covering seeing in Bank Nifty. But as long as it's not happening, the entire market may remain under pressure, and on any higher side of the ranges, both the indices can continue to see selling pressure as well. So it's better to just leave the indices play as of now and focus on good stock specific strategy until the broader markets settle down and they give you a confirmed trend on either side.
Okay, that's as far as the view coming in on the markets for the next week. Raghavendra first on Tejas Networks and then the market view for the next week.
Tejas is not looking very promising on the chart, and the quarterly result is also very disappointing. I don't think any upside is there. So I don't I don't track this stock, but still
Yeah.
looking good. So as Sony said, that stock is going to fall down below 800. So definitely I believe that. And apart from that, Nifty, Bank Nifty, sell on rise because both the stocks are both index are feeling selling pressure on the higher side. Bank Nifty and the Nifty sell on rise. Bank Nifty I'm expecting 45,300, 45,400, and the Nifty 21,300 is my target.
Okay, Raghavendra, one more stock that you've constantly bet big on, Coal India, 4% higher, the top mover on the Nifty today, 398. You said that, this coal maker is going to be turning into a diamond maker. I clearly remember that phrase. It's turned out to be in the same fashion
Absolutely,
for all
absolutely.
the investors over these last 3 odd months. I think it was 3 months back that you were betting very big on Coal India. So congratulations to you for talking about Coal India with such conviction on Business Today television as well. And for all the investors who listen to you, they are definitely celebrating your view. 400 now, your own thoughts on where is the stock headed?
Still, Sakshi, I believe, the stock have much better than other stock potential. I believe the stock have potential to touch 500 plus level very soon. Don't sell this stock. This is going to be a diamond for the PSU stocks. And I believe this stock have potential to touch 1,000 level. So I am not selling my stock. If anyone interested to sell, they can sell. I will buy. But I'm still buying this stock. I'm still buying this stock. So this stock is going to touch, much higher level.
Okay. Sony, are you also as convinced about Coal India?
Absolutely. I think Coal India is looking quite strong on charts. Like I think we've already discussed, and I've given this as one of my picks for today. Very aggressive long built positions, very aggressive, 20 odd percent. So I think it's looking quite good. Technical breakout, RSI positive divergence, quite nice. And immediate targets is 420, 425 that you can see. Then again, if you see any sort of dip again on around 2, 3 odd percent, it should be a good re-entry opportunity. Overall, for a long term, also it's looking quite strong. I think I would keep the targets of about 460.
Okay. Well, with that, thanks a lot, Sony, and thanks a lot, Raghavendra, for being with us on this special edition. Let's start wrapping up the markets for you. Coal India, 4.2% higher, the top gainer on the Nifty, 399 currently. ICICI Bank at 1,011 being seen currently. HDFC Bank higher in trade. Is the Nifty that's now slipping away, 21,585.1% down in trade. The Sensex down by about 198 points, 71,484. The Nifty Bank, however, bucking the trend, 0.9% up in trade. And we are back at 46,100 for this one. The Nifty mid-cap 100 at record levels are near about that 48,072 being seen on that one as well. Of course, the Nifty advances are 1160 stocks to 1,075. So the market breadth is clearly divided at this point in time. The gainers include Adani Enterprises, ICICI Bank, Power Grid. These are the stocks that are moving up anywhere between 0.7 to 2.5% in trade. HDFC Bank, Hindalco, SBI. Those are the kind of stocks that are moving up. The metal index up by 0.2% in trade. And you can also look at some more stocks like Kotak Mahindra Bank that's inched up higher, 3% up in trade. ICICI Bank, Power Grid. You also have Britannia that's moved up in trade as well. So those are the kind of momentum that you've been looking at into the stocks so far. When we also look at Titan, Maruti, ITC, Asian Paints, these are the other stocks that are moving up in trade as well. Now, when we look at the sectoral action, let me tell all our viewers how the markets have shut shop. With the Nifty Bank gaining 0.79% odd, you have financial services up in the green. You also have the PSU banks that's up by 1.8%, the index that moved the sharpest. Oil and gas followed with some gains coming in on the metals front as well. The tech sectors that dragged today, FMCG 1.2% down, 1% down for the IT index, consumer durables down by 0.7%, realty stocks down by 0.8%, half odd percent declines coming in for the healthcare and the pharma sector as well. So that's how far as how the broader markets have taken shape as well. So we're looking at wrapping up this market on a subdued note. I think about over 1% of a loss on a week-on-week basis with one extra day added is concerned for the markets. The sluggishness may continue. That's what Sony and Raghavendra have really pointed out. It's better to remain stock-specific. Power space, PSU space, railway space to continue to be in action as well. Stocks like Bharti, Airtel, Coal India, big bets from both of our guests. And of course, REC, that's the stock that Raghavendra is also watching out for. So the power finance companies also going to be under watch list as well. All right, so with that, we will wrap up this very special trade for all our viewers. Here's wishing you a happy weekend. All the action shifts, focus gets shifted to Ayodhya, and you can be with us on Business Today Television to catch all the live and exclusive action right from the Ram Janmabhoomi. So don't miss out on all of that action as well. Many thanks for being with us or to this special.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.
Hello and welcome to Business Today Television. I'm Siddharth Zarabi, and with me is very well-known, noted economist Ishwar Prasad of Cornell University in the United States of America. Mr. Prasad, welcome to India Today and the Business Today studio here. And it's clear